Hey everyone, and welcome back to Talk Tickers, the show where we break down the latest earnings calls and try to figure out what it all means, for you, the investor, the average Joe.
Exactly.
So today,
Yeah.
we are strapping in
Buckle up.
for a deep dive into Peloton's Q2 2025 report. And let me tell you, it's a wild ride.
It really is a wild ride. We're seeing a company in transition, making some bold moves to redefine itself in a rapidly changing fitness landscape.
Totally. And, first things first, Peloton exceeded expectations this quarter. They beat their guidance on revenue,
Yeah,
profitability, and even managed to pull in positive free cash flow.
impressive, right? Especially when you consider the headwinds so many companies are facing
Totally.
in the current economic climate.
It's pretty crazy. Now, you might be thinking, wait, didn't people start ditching their Pelotons after the pandemic hype died down?
Right.
And yeah, there was a slight dip in overall subscriptions. But here's the kicker. Their churn rate, the percentage of people canceling, actually improves significantly,
Right.
hitting a super low 1.4%.
Yeah, that's fascinating because it suggests that Peloton is shifting from a growth at all costs strategy to a model focused on retaining and engaging their existing customer base.
So they're holding on to their riders. But how about those who are buying new bikes?
Well, there's been a shift there too. Sales of their connected fitness products, meaning the bikes and treadmills, were down year over year.
Okay.
But here's the twist. Their gross margin on those products actually skyrocketed.
So even though they're selling fewer bikes, they're making more profit on each one.
Exactly.
That's interesting.
It is. They're clearly focused on maximizing profitability, even if it means sacrificing
Yeah,
some volume.
makes sense. All right, so let's dig into some specifics. Their connected fitness products revenue clocked in at $253 million for the quarter.
That's a 21% decrease year over year, which might seem alarming at first glance,
Right?
but it's important to remember that they're intentionally shifting away from a volume-driven model.
Right. And their focus on higher priced products is paying off.
Huh.
That's reflected in their impressive connected fitness products gross margin of 12.9%.
To think about that for a second, a jump of 860 basis points
Wow.
year over year. That's a testament to their strategic shift and their ability to control costs.
It really is. Now let's switch gears and talk about subscription revenue, which came in at a solid $421 million.
Right. This highlights the strength of their subscription model and the stickiness of their content and community.
And even with that shift towards higher margin hardware, their subscription gross margin remained strong at 67.9%.
Yeah, they're walking a tightrope balancing the desire for premium hardware sales with the need to maintain a robust subscription business.
Yeah,
And so far, they seem to be doing a pretty good job.
absolutely. Now let's talk about their operating expenses, which took a serious nosedive this quarter, dropping by $122 million or 25% year over year.
This is where their laser focus on cost management really shines through. They've streamlined operations, made some tough decisions, and it's paying dividends.
And those dividends are reflected in their adjusted EBITDA, which landed at a healthy $58 million for the quarter.
Wow.
That's a $140 million improvement year over year.
That's not just a win.
Yeah.
That's a major victory. It shows their efforts to restructure and optimize are having a real impact on their bottom line.
For sure. And then there's free cash flow, which also delivered a knockout punch coming in at $106 million.
4 consecutive quarters of positive free cash flow. That's not just luck. That's a sign of a company that's in control of its finances and executing its strategy effectively.
They're also sitting on a sizable cash cushion with $829 million in unrestricted cash and cash equivalents.
That kind of financial stability is crucial in today's
Yeah.
uncertain market.
Yeah.
It gives them flexibility and options for the future.
They've also made significant progress in deleveraging their balance sheet with their net debt shrinking by $281 million or 30% year over year.
This demonstrates their commitment to fiscal responsibility. They're not just focused on the short term, they're building a solid foundation for long-term growth and sustainability.
Speaking of the long term, their guidance for the rest of the year is looking pretty optimistic as well. They've raised their full year adjusted EBITDA target by a hefty $60 million.
Talk about confidence.
Talk about confidence.
Right, and it's well-founded confidence based on their performance this quarter and the strategic direction they've outlined.
They're also projecting free cash flow to be at least $200 million for the year, another indication of their commitment to generating cash and strengthening their financial position.
This focus on free cash flow is particularly important in the current economic climate.
Yeah.
It gives them the resources to invest in growth initiatives, weather any potential storms, and potentially even reward shareholders down the line.
All right, before we move on to part 2 of our Peloton deep dive, let's have a little fun, shall we?
Yeah.
It's time for our This Is Not Financial Advice segment,
Okay.
where we toss around a completely outrageous yet somehow plausible trade idea based on this earnings call.
Yes, our favorite part. A reminder that we're here for entertainment and definitely not dispensing financial wisdom.
Exactly. So hear me out. What if, and I'm just spitballing here, what if we short Nordic track?
Short Nordic track. Okay, you've got my attention. Walk me through your logic here.
Well, Peloton's clearly demonstrating that a laser focus on premium products, personalized coaching, and community building can be a winning strategy.
True. Their low churn rate suggests their users are highly satisfied,
Yeah.
and that new Captain America tie-in brilliant marketing.
Exactly. Meanwhile, Nordic Track seems stuck in the past, pushing discounts and chasing mass appeal. They haven't quite grasped the power of personalized fitness and building a dedicated community.
That's an interesting angle. Peloton's success with initiatives like pace targets and personalized training plans could signal that the market is shifting towards more tailored fitness experiences.
Right. People want more than just a basic workout. They want to feel connected, motivated,
Yeah.
and part of something bigger.
So your thinking is, as Peloton continues to climb, Nordic Track might start to feel the heat their subscriber growth could falter.
Yeah.
And their stock price might take a hit.
Bingo. It's a gamble, sure. But sometimes the most outrageous trades are the ones that pay off.
Just remember, folks, this is purely hypothetical and, as always, not financial advice. Do your own research, consult with a professional, and don't blame us if you decide to short Nordic Track based on our silly banter.
Absolutely. We're just having a little fun here.
Right.
Now, before we get too carried away with our imaginary trades, let's take a break and come back for part 2 of our Peloton deep dive. We'll delve deeper into their strategic initiatives and what this all means for their future. Stay tuned.
Sounds good. Welcome back to Talk Tickers. Before the break, we were having some fun with that short Nordic Track idea, but now let's dive back into Peloton's strategic moves and see what they're doing to navigate this evolving fitness landscape.
Yeah, because they're not just sitting still. One thing that caught my eye was their push into strength training. They're not just a bike company anymore, are they?
Definitely not. Their new Strength Plus app is a smart move to attract people who might not be into cycling, but are looking to build muscle.
So they're casting a wider net, trying to appeal to a broader audience. But are they risking alienating their core cycling fan base?
It's a balancing act for sure. But remember, they're not abandoning cycling. They're simply adding more options to their menu, which could actually help them retain existing members who might be looking for more variety in their workouts.
Okay, that makes sense. It's like they're building a full-fledged fitness ecosystem.
And speaking of expanding their reach, they're also partnering with brick-and-mortar retailers like Costco.
Yeah, that Costco partnership is a bold move, giving them access to a massive customer base who might not have considered Peloton before. It's a way to introduce their brand to a whole new audience.
It's like they're meeting potential customers where they already are, instead of waiting for them to come to Peloton. But doesn't selling through a big box store like Costco kind of dilute their premium brand image? Potentially, but it also allows them to test the waters in a more accessible way. Someone who might be hesitant to shell out thousands of dollars for a Peloton bike might be more willing to try out a Peloton product at a lower price point through Costco.
Right. It's a way to introduce the Peloton experience without the full commitment. And they're not just expanding domestically, they're making moves internationally as well, right?
Absolutely. International growth is a smart strategy for any company looking to expand their reach and diversify their revenue streams. Peloton is tapping into new markets and building a global fitness community.
It's not just about selling more bikes, it's about spreading the Peloton ethos worldwide.
Exactly. They're building a brand, not just a product. And one of the ways they're doing that is by focusing on community building even within their existing user base with things like Peloton Teams.
Teams, what's that all about?
It's a way for Peloton members to team up with friends or other members and compete against each other or work towards shared fitness goals.
So it's like adding a social layer to the Peloton experience.
Yeah.
Makes sense. People are more likely to stick with something if they feel like they're part of a community.
Exactly. It's about motivation, accountability, and that feeling of belonging to something bigger than yourself.
And it taps into that human desire for competition, right?
Yeah.
We all love a good challenge.
For sure. And Peloton is smart to capitalize on that. They're even leveraging big events to bring their community together, like their annual Thanksgiving Day turkey burn.
Oh, yeah, I've heard about that. Isn't that one of their most popular events?
It is. It's a way for members to come together virtually, of course, and burn off those Thanksgiving calories while having some fun and feeling connected to the Peloton community.
Like a virtual Thanksgiving dinner party, but with sweat instead of stuffing.
And speaking of Thanksgiving, they also had their first ever live strength class on Thanksgiving Day, right?
They did, and it was a huge success. Their feast class became their biggest live strength class ever, which shows you how much their strength training offerings are resonating with their members. So they're expanding their offerings, building a strong community, and venturing into new markets. But what does all of this mean for Peloton's future? Are they on the road to recovery, or are they still facing an uphill battle?
Well, it's still early days, but the signs are definitely encouraging. They're not just surviving, they're adapting, innovating, and showing signs of a real turnaround.
So they've shed that pandemic darling image and are evolving into a more mature and diversified fitness company.
Exactly. They're thinking long-term, focusing on sustainability and profitability. It's a different Peloton than the one we saw a few years ago, and that's a good thing.
Okay, so things are looking up for Peloton. But what are the key things we should be watching for in the coming quarters? What will determine their continued success?
Well, subscriber growth will be a key indicator. They've managed to keep their churn rate low, but can they attract new members at a healthy pace?
Right, because without new subscribers, it's hard to grow revenue and expand the business.
Another key factor will be their ability to maintain their financial discipline. They've made impressive strides in reducing costs and improving margins, but can they sustain that momentum?
Because if they start slipping back into old habits, all those gains could quickly disappear.
Exactly. And let's not forget about innovation. The fitness landscape is constantly evolving, so Peloton needs to stay ahead of the curve with new products, features, and content that keeps their users engaged and excited.
Because let's face it, in today's world, you can't just stand still. You have to keep innovating or risk becoming irrelevant.
And finally, let's not underestimate the importance of community. Peloton has done a phenomenal job fostering a sense of belonging among their members. Can they continue to nurture that community as they grow and evolve?
That's a great point, because ultimately it's the community that sets Peloton apart from the competition.
Absolutely. It's the secret sauce, the thing that makes people stick around even when there are cheaper or more convenient fitness options available.
So lots to watch for as Peloton continues its journey. But before we get too ahead of ourselves, let's take a quick break and come back for part 3, where we'll unpack some key takeaways from this earnings call and, of course, revisit that wild trade idea we cooked up earlier. Stay tuned. Welcome back to Talk Tickers. We've covered a lot of ground in our Peloton deep dive, from their impressive financial turnaround to their ambitious strategic initiatives. Now let's take a step back and try to synthesize everything we've learned.
Sounds good to me. Let's see if we can extract some key takeaways and maybe even have a little more fun with that short Nordic track idea we were tossing around earlier.
All right, so big picture, Peloton is proving they're more than just a pandemic fad. They've weathered the storm, adapted their strategy, and emerged as a more resilient and financially sound company.
Absolutely. What stands out to you as the most significant shift in their approach?
I'd say their focus on profitability over sheer growth is a major sign of maturity. They're not just chasing subscriber numbers anymore. They're focused on building a sustainable business model.
That's a crucial point. They've made some tough decisions, streamlined operations, and tightened their belts, and it's paying off in a big way. Their margins are up, their cash flow is positive, and they've significantly reduced their debt.
And they're not just cutting costs, they're also investing in innovation with new offerings like Strength Plus and personalized training plans.
That's another key takeaway. They're not resting on their laurels. They're constantly looking for ways to enhance the user experience and stay ahead of the curve in the ever-evolving fitness landscape.
And let's not forget the power of community. Peloton has cultivated a fiercely loyal and engaged following that goes beyond just working out. It's a lifestyle, a shared experience that fosters a sense of belonging and motivation.
That's something their competitors are struggling to replicate. It's what makes Peloton unique and gives them a competitive edge.
So they've got the financials, the innovation, and the community. But what's the missing piece of the puzzle?
Growth. While they've stabilized their business and shown signs of a turnaround, reigniting subscriber growth will be crucial for their long-term success.
And that's where those strategic initiatives we discussed earlier come in. Their push into strength training, international expansion, and partnerships like the one with Costco are all aimed at attracting new users and expanding their reach.
It's a multi-pronged approach that leverages their existing strengths while exploring new avenues for growth. It's a smart strategy, but only time will tell how effective it will be.
Right. It's all about execution now. They've got the plan in place now. They need to deliver. But before we get too far ahead of ourselves, let's circle back to our This Is Not Financial Advice segment and revisit that audacious idea we had earlier, shorting Nordic Track. Given everything we've discussed, is that trade looking any more plausible now?
Well, it's certainly an interesting thought experiment. Peloton's success with personalized fitness and community building could indicate a shift in consumer preferences, away from the mass appeal, discount-driven approach that Nordic Track seems to favor.
Right. If more and more people are seeking tailored fitness experiences and a sense of belonging, Nordic Track might find themselves lagging behind.
It's a bold bet, no doubt, but it's not entirely out of the realm of possibility. Peloton is setting a new standard in the connected fitness space, and companies that fail to adapt could be left behind.
Okay, so maybe our wild idea wasn't so wild after all. But remember, folks, this is purely hypothetical and, as always, not financial advice. Do your own research consult with a professional, and don't blame us if you decide to short Nordic Track based on our playful banter.
Exactly. We're just having some fun and exploring different possibilities.
All right, that wraps up our deep dive into Peloton's Q2 2025 earnings call. We hope you found this insightful, entertaining, and maybe even sparked some ideas of your own. As always, we encourage you to do your own research, and remember, none of this is financial advice. Until next time, stay informed, stay curious, and keep those trading wheels turning.